The Federal Reserve is hurting the job market. The US economy is growing, and it's growing much faster than what consensus estimated. However, in this graph, courtesy of JP Morgan, what you can see is that the Fed's policy in terms of interest rates is significantly above the neutral level, which means an average level of job destruction of 1 million jobs per year. The Fed narrative is predicated on a completely wrong idea about the impact of tariffs on inflation. The latest figures are very evident in terms of the PCE index, the core PCE index. All of the measures of inflation that the Fed allegedly pays more attention to are showing that there is no impact of tariffs on inflation. The US economy is doing much better than what consensus estimated. Remember that everybody was talking about a recession, about an elevated inflation. The US economy is growing faster than what anybody expected, and it's coming from higher investment and higher consumption. But it's also very important to understand real wage growth is rising. The US economy is not only growing faster than what anybody expected, but more importantly, it's doing so by reducing government spending. Now think of this for a second. Everybody is silent in the mainstream about the stagnation of the UK economy, the stagnation in Canada, stagnation in France, stagnation in Germany, stagnation in Japan. And in those 5 nations, all of them are at the same time increasing or maintaining very elevated government spending. In the United States, the economy is growing 3.8%, reducing government spending. And the Social Democrat consensus keeps talking all day nonsense about the US economy. They should pay more attention to the fact that social democracy is not working and that statism is destroying developed economies. However, the unemployment rate remains very, very positive compared to any of the leading nations with which the United States compares itself. Furthermore, it's coming with an increase of private sector jobs. So reduction in government jobs, increase in private sector jobs, reduction in government spending, increase in productive economic growth. That is the way to grow an economy. The Atlanta Fed has revised its estimates of third quarter annualized growth for the United States, and it's at 3.9% now. Consensus was completely wrong about the US economy yet again. The dollar remains as the world's most important fiat currency, not only the most important, but at 57%, it is more than all other currencies combined. Gold and silver are rising, they're rising fast, but they are still way behind what is likely to be the biggest period of monetary destruction in history. Coming from what? From not just the excess of debt of developed nations, but also the enormous levels of unfunded liabilities. You may have heard a number of times that foreign investors are massively selling US treasuries. Completely false. In this graph, courtesy of Bloomberg, what you can see is actually the opposite, is that foreign investors have been buying and buying faster in the past 6 months, with a very clear picture that the US dollar is likely to continue to be the world's reserve currency in the fiat world. Yes, gold is rising, but holdings of US treasuries as well. That shows that there is a concern about the fiat currencies. However, in relative terms, the dollar remains as the safest one for most nations and most central banks.